wouldn't it? Yeah, because you'd be looking at yourself in a mirror.
It's like a mirror, exactly.
All right. Let's get the...
Oh, we're live. Oh my God, caught us by surprise.
What happened?
Our director here didn't let us know with the thumbs up. But anyway, cool. Welcome to another live Q&A on here at the Edge offices every Friday, 12 p.m. Pacific time. Here to talk about some of the latest topics in crypto and questions we got. Let me mute my computer because, sorry about the technical difficulties here, but got to mute my computer. I'm looking at the live stream as it is. But talking about some of the hot questions of the week, as well as any questions you guys might fire off. So feel free to go ahead and chime in, post a question on the YouTube chat, and we'll go ahead and answer them as the podcast continues. So quick introductions, myself, Paul Hui, CEO and co-founder of Edge. Joined here by
William. I do some programming sometimes.
Likes to call himself the code monkey, or code plumber, I think is what you originally. Code plumber, but he makes it all happen. So definitely our main lead dev, architecting most of what Edge is ever since the days of Airbit's early co-founding days. So
well, what do you do at the company?
Not a whole lot lately. You know? So just kind of like keep the plates spinning. You know, like there's a bunch of plates spinning. Make sure they don't fall, and I just kind of keep spinning them, and then other people are holding them and moving them around. So that's what I try to do. Occasionally I'll travel. And see some other folks in the cryptocurrency space, and do have some travel coming up, and we'll mention that as well at the end of the podcast. What are the different events that we're going to be headed to? But first, we got quite a few questions from the kind of industry as a whole. What are the couple main things that we're going to be talking about today, William?
Well, I read an article about Tether, which was very amusing.
Very amusing, and more insight into Tether. Not to over talk about them, although they were talked about pretty hotly a couple months ago and a month ago. Not so much this week, but it's still an ongoing question. Like, hey, am I safe with the holding Tether or not? Should I get rid of it? What's actually going on underneath the covers? So we'll talk a little about that, and then as well, one thing that's incredibly relevant we'll cover as well is the switch to multi-collateral DAI. Oop, turn off ringers, everybody, including me. Multi-collateral DAI. So if you are currently holding DAI, the MakerDAO project and team has now launched a new version of DAI that is multi-collaterally backed. And so how you deal with having both and what they're called, we'll talk about that as well. But Tether, let's kick it off with Tether. You read a really fascinating, interesting article about it. Give us the insight.
So I actually read two articles about Tether. And they're both written by people who are not cryptocurrency people.
Which is important because obviously we're kind of in the bubble, the echo chamber of cryptocurrency folks who hear the same things over and over again.
Right. So this guy basically starts off. I wish if my screen hadn't gone into background mode. Let me go ahead and just figure out what the name of the article is real quick for you. Patrick McKenzie. Okay, so he's not the Bitfinex guy. He's actually a different guy. Anyway. He's clearly not, because he says, what is Tether? Well, Tether is the internal accounting system of the largest fraud since Madoff. The whole article just full of snarky zingers. So
take it as it is, right? Realize that it is someone that's trying to be snarky and create some good entertainment. But there's some interesting insight from the article.
If you kind of chop through the snark, his basic gist of it is that Tether is owned by Bitfinex. Mm-hmm. And Bitfinex has had trouble maintaining banking relationships.
Which is true of pretty much every exchange in the world.
Every
cryptocurrency, super common.
Yeah, banks don't like cryptocurrency exchanges because cryptocurrency exchanges have to maintain a very high level of KYC and financial regulation and following all the jurisdictions.
And they're ripe with fraud, and banks don't like that. They don't like having to reverse transactions. It looks bad on them. It looks bad for them to their partner bank accounts. And effectively, if what's causing that are cryptocurrency exchanges, then they're not going to like it. So that's fair.
Right. It makes perfect sense, right? Unless you're maintaining very high standards. So Bitfinex has had trouble maintaining banking relationships. They sued Wells Fargo because Wells Fargo dumped them as a customer. Yep. They put a $2 million Series A round into some bank in Singapore or something. And then that bank lost its banking relationship with the United States, so that didn't work.
Wow, so it's such a problem that they're investing in banks just so that they can actually have a bank to work with.
Yes.
It's almost like they're launching it's just shy of launching your own. Why don't we invest in one so that you know that bank will continue to operate for your own business?
Well, if you had started your own bank, then no one would want to deal with you because they'd be like, oh, it's a cryptocurrency bank.
Right.
Exactly. So that was kind of the situation they found themselves in. So they invested in Tether as a way of getting dollars in and out of their platform without having to deal with banks.
Right. Effectively, that makes it where Tether deals with the bank versus a cryptocurrency exchange. Tether being almost like a shielding.
Well, I mean, you could have a viable cryptocurrency exchange without dollar on-ramps or off-ramps if you purely did Tether and it was just like a Poloniex kind of deal where it's just crypto to crypto and there is no banking relationship.
Exactly.
So that would just kind of alleviate the pressure, was their thought.
But Tether then becomes their shield.
Yeah.
Tether and the company, which can claim that we're not a cryptocurrency exchange, we're a payment mechanism for dollars, and we're effectively holding dollars to enable that payment mechanism, makes for a better story to their partner bank account.
Sure.
Yep.
So, but they do need banking in order to bring dollars in so Tether's going to be backed. So the idea behind Tether is it's backed 1-to-1 with dollars, trust us.
Correct.
There is $1 in a bank account for every one Tether that exists floating around in the crypto space. That's their claim. So they still need banks to make that kind of a system work. And we'll talk about DAI in a bit and how that would differ, and you don't necessarily need to do what they're doing, because what they're doing is very centralized. And the whole point of cryptocurrency is we don't need centralized systems, and then when you have centralized systems, stuff like this happens.
Yeah.
And so what is this stuff that happened? They had a partner called Crypto Capital Group, which is basically straight up kind of money laundering. It's like, we're going to open accounts at various banks that aren't paying too much attention, and we'll shuffle money between these accounts with like messages that say purchase for real estate when it's not really for real estate. You know?
So ironically, I think this Crypto Capital Group is doing what many individual exchanges I've heard in the industry, especially back in 2013 and 2014, were doing for themselves as an exchange. Like exchanges, and especially payment processors, I won't name any, but I've talked to some of the CEOs of some payment processors which basically had 20 different banks, and they would just say that they're a flower shop or whatnot. And this is kind of what cannabis companies do too. We're
because nobody wants to bank.
We're a pharmacy, or we're literally a flower shop.
Because that's what you're selling.
Yeah, exactly. And it then requires the bank to go and do deeper due diligence to determine that, actually you are a cannabis shop, or you actually are a cryptocurrency industry. But I could see how, yes, Cryptocurrency Group was basically, maybe not so much quote unquote money laundering. They're shielding companies from the banks as a service.
Right. So you have all these assets that are backing your tethers in this company, and it's holding all these shell accounts, and then the New York Attorney General figures out what's up and freezes all the accounts.
Got it.
So as long as you're...
And was Cryptocurrency Group working just for Bitfinex or for other companies as well?
Well, I think from what I'm reading in this article, and I don't know if these allegations are true, but they were working for straight up like drug cartel money laundering.
I see. So they were working for that in addition to some cryptocurrency.
Besides cryptocurrency exchanges, they were also doing other shady business.
Got it.
So I think that's kind of what caused this fallout. So now Tether is not backed by anything other than IOUs from this Crypto Capital Group, which is not able to pay because all their funds are frozen. And they're probably not going to come back.
Now that happened, do we have a point in time when the funds were frozen? Is that mentioned in the article?
Let me see here.
At least we know it has been some time since that had occurred. That it's not just, this is not breaking news where
This whole thing, somebody got arrested even, in fact. I don't even remember. This was like earlier this year, actually, like May or something.
Okay, so earlier this year, Crypto Capital Group effectively had lost their banking relationships, funds frozen, and any of the companies and entities that were using them to be able to use bank accounts effectively just lost that money. Right, that money basically just disappeared out of thin air in that regard.
So I'm trying to get this fact straight, but it sounds like they then changed Tether's description to, we are backed not by dollars in bank accounts, but by IOUs and other equivalents.
Correct. This was the big moment that a lot of people were talking about when they suddenly changed the terms of service of Tether, and that yes, it's fully backed. You could still say it's quote unquote fully backed, but by what? And as soon as you turn it into an IOU, you've now backed it by something that you don't know you're going to be able to retrieve the true value.
Exactly.
Which is what a lot.
So there's a big question as to whether or not, how backed are they when they say they have IOUs? Like the principals behind Crypto Capital Group did get arrested, and the bank accounts were frozen, and so now we don't have the money theoretically. The other thing is, according to this, Crypto Capital Group was also skimming 10%.
Well, in a way, if you're going to be, we know that middleman for a lot of shady businesses skim probably even more than 10% on average.
Yeah.
And if you think about what the cost of holding business and what you're able to drive through a bank account for a very large currency exchange or for very, very illicit activity, 10% is nothing. So skimming 10%, well, everyone has a fee.
Yeah,
right? Everyone's taking their cut. It sounds like a lot, but once you make something illegal, you pretty much make it ripe for a huge amount of middleman cuts. Right? Because very few are going to be willing to do the service, and they're going to charge a whole lot for it.
So, and then he talks about their ICO, right? The utility.
The Bitfinex token that would, this is due from the hack era.
There was the hack token, which they
token.
issued a token that when they lost all their money due to a hack, which is totally separate from this.
Completely separate from that. Separate from Tether. And actually that was what I think the industry for quite some time until today gives Bitfinex a lot of respect for. Like they dealt with a hack in a way that made people whole. Right?
Everybody took a haircut, but then they gave you tokens back that represented your haircut, and you could sell those tokens and trade them and get back your dollar for your dollar.
And you could sell them early and get not quite dollar for dollar, right? You'd be taking a loss, but you'd have some of your money because someone in the open market was willing to take a bet that would achieve parity or go higher than that. So it's basically an equity in the company. They sold more effective equity in the company and were able to make many people whole by their choice. So it might not be whole on what the value of the crypto would have been today, but the dollar value at the time that people lost, many people that bought those tokens saw 2 to 3x gains from what that dollar
I tried to buy them, but I wasn't allowed to because it was
exactly because it's effectively a security, and so we wouldn't be able to buy them. But anyway, that's a separate issue from Tether altogether.
Right.
But you had mentioned the ICO.
Well, apparently they've been see here something about. Yeah, okay. I'm confusing this section, but he's basically talking about them converting their tokens into equity has the effect of basically creating a dollar balance on their spreadsheet. Because they have this thing that represents a liability of $1.
Correct.
As soon as you turn it into equity, now that liability has been canceled, and then you can use that money to satisfy your Tether problems.
Well, yes, because they're effectively selling off these tokens for dollars. And then if that's supposed to be dollars in Bitfinex, but if that was used as dollars to back the Tether in case people did withdrawals from Tether, then that's what is generally called a commingling of funds, right? Which is generally not supposed to be done.
So anyway, the bottom line is there's a big question as to whether or not your $1 Tether has actually $1 worth of anything behind it.
Right.
Even if they say that it's fully backed, it could be fully backed with things that are not there.
Exactly. Right. It's really a promise, and the question being is, will enough people go and withdraw actual dollars
at the same time?
At the same time, relative to the amount that's going into Tether. And the one thing that it simply has going for it is that it's the most popular. It has very liquid markets in pairs to other cryptocurrencies.
Right.
And when you have that, people say, well, I need to go get some Tether in order for me to make a trade or to transfer money between different exchanges. And that creates a demand for it, which effectively creates a demand to not sell it for actual dollars.
And that was his point, is that as long as people are coming into the casino, new people, they don't want to pull their money out, and you can just keep the poker chips going even if there's nothing behind it. But as soon as people start wanting to cash out and actually buy those Lambos, every Lambo you buy, you're ending the game for someone else.
And the thing that will really put Tether, will really kill Tether if it happens, is liquidity occurring across other stablecoins.
Right. So his point is things are probably fine for now. But if another stablecoin starts to take the cake, then we could have an implosion where maybe Tether's short $1 billion or some massive amount of money that's all held in IOUs and things that aren't liquid and whatever have you. And then we hit that limit, and then the other $1 billion evaporates because it was never backed by anything.
Like someone tries to go and withdraw their Tether, much like people tried to withdraw their Bitcoin and dollars from Mt. Gox and realize that there's not enough there. And they start putting, as soon as you see there's a weight to withdraw your actual dollars from the service, that's a huge red flag.
So his prediction is that when that happens, we're going to see a spike in the price of Bitcoin as people try to cash their Tethers out for anything they can get their hands on.
Right.
Followed by a crash of crypto in general.
Right, because it's propping up a large amount of the market cap of crypto.
Right.
Right.
The other thing he said, this is a separate article, this is not the same guy, that there was actually a pretty nice little scheme going on in 2017 where you can print a bunch of Tether unbacked, when no one's there to check it, it's unaudited, sell it onto the market, which is going to raise the price of Bitcoin because now you're creating this buy pressure on Bitcoin.
Right.
Okay. Then now you have this Bitcoin that's worth double or 10x or 10% more or whatever, right?
Right. Sell it.
Then you sell it,
for actual
You just
knowledge.
made a 10% profit that you can
Right.
then go and back your Tether with.
All right, so Tether can effectively reback itself.
Yeah, and you get a nice profit by boosting the price of Bitcoin up and up.
It's amazing what you can do when you drive a vast amount of the liquidity of an economic system.
Right.
Right, which in ways is kind of what the dollar does itself.
And the fact that it was unbacked for like a week or a month, maybe nobody notices, and when
Right.
they come back and check it, it's there, and
It's
you're all
there.
good, and you may just made a bunch of money.
And you did it through basically a manipulation of the price because there are so many other exchanges that will accept Tether as the currency pair for
Right.
for Bitcoin.
So anyway, that's this kind of stuff is shenanigans.
It's the scary stuff of cryptocurrency, admittedly.
yeah, but the point is, it's all centralized stuff.
Right.
This is the exact sort of thing cryptocurrency was designed to prevent, assuming you do it the way it's supposed to be done and not centralized.
Exactly.
So let's talk about some decentralized.
Right, exactly. What are some great alternatives to Tether?
Yes.
Now, like the author was mentioning, it's probably going to be fine for a while, and so a lot of people
Right,
are
until
holding
it's not.
until it's not. And so, for those people that are holding Tether or actively trading using Tether, you're kind of, especially if you're a day trader, well, you're taking a pretty big risk just being a day trader. And so long as you understand that this is another one of those risks, and if you're using even a centralized exchange, that's not necessarily any better.
Right.
Right.
Like
a lot
your
of
money
centralized-
can just evaporate.
Yeah, just by having centralized
Now
exchange,
Gox.
you could have a Gox moment.
Yeah.
And if you're holding Tether, it's not too different than holding funds on a centralized exchange.
Mm-hmm.
So just kind of realize that. And a lot of people still do anyway because they just simply accept that risk. Hopefully they at least know it. Now from the viewpoint of what are the different alternatives which are out there. First, there's other centralized alternatives which at least have somewhat better auditing and respect in the ecosystem.
Right. So I think USDC,
USDC
isn't that backed by Coinbase?
Coinbase and Circle. I don't know if there are any other members of USDC, but I know at least Coinbase and Circle are backing that, and
they actually have
claim
like the
auditing.
ability to have more audit.
Yeah,
so
more
maybe
regulated,
they're more on
a
a
little
level.
bit better.
Yeah, but still centralized. So you're
they're
always
still
kind of
centralized.
taking a risk.
GUSD is another that's also used within the industry. Both of them don't quite have the liquidity. You'll notice bigger price spreads when you're trying to trade one of those with Bitcoin.
So one Tether is exactly $1.00,
Pretty
whereas
close to a dollar.
maybe it's like 99 cents or $1 and a penny for some of these
Exactly,
other
or
ones.
it's considered worth $1 maybe across the board, but once you actually try to trade it for something else, the exchange rate
It slips.
it slips exactly. There's not as much liquidity, or you have to go from GUSD to convert into Tether to then convert into Bitcoin, which is why you'll see a bigger spread when trying to turn some of the other coins into Bitcoin or vice versa. As well, that also exists with some of the more decentralized solutions such as DAI.
DAI.
Right. So for those that aren't familiar with how DAI operates, maybe you can give a recap. Functionality in DAI. What's actually happening here in the system, and how is it better than Tether?
So in Tether, it's backed by dollars in a bank account, which obviously are not crypto and therefore can't be audited, or they can be, but it's not straightforward. So DAI said, let's back our dollars with some other crypto basket. So Ether specifically.
Right. Original DAI is basically just backed by Ether.
So if you say you have $1 million of DAI circulating, that means you have $1 million worth of Ether in a smart contract locked up, untouchable, that represents the value in that dollar.
Exactly. And I think the exact amount of Ether locked up obviously depends on the price of Ether because as volatile goes up and down.
Right.
But generally speaking, when effectively the smart contract that prints DAI, creates DAI, it asks for a higher level of Ether, over collateralized.
A little bit about, yeah.
Yeah, I think it's 150%. So
because if the price of Ether goes down, you still have enough Ether backing the DAI.
Exactly. It's an over collateralized backed stablecoin. And that allows it to stay decentralized because Ether itself is a decentralized currency. And so the backing doesn't require an institution that you're trusting. The smart contract is the one that's
on the
holding it.
blockchain in a code way that you can just audit the code.
Yep. Exactly. So
and
that's
then,
going to
of course, you need some sort of a system for getting the exchange rates in, and they have some complicated stuff there. But assuming you've got an accurate exchange rate feed, the contract knows how much Ether it needs to maintain a certain circulation of DAI, and if the Ether will fall below that limit, it has some complicated stuff to pull DAI back in.
Exactly, and a lot of the exchange rate information through the feed is effectively an oracle of real-world people and machines that put information onto the blockchain and are motivated to do that through a financial reward that they have with the maker token. Right. So this is it's a complete system, but in the end, it's a lot of that system of creating the DAI token is hidden from the end user, and it's almost like there's a financial services underneath, much like, not to give it credit, but the dollar and how it's kept relatively stable is somewhat complex under the covers, but to the end user, they just use the currency. DAI is kept relatively stable by a lot of complexity underneath the covers of loans and interest rates, but to the end user, they have a coin that is backed, and it's backed by something with value, but it's interestingly backed by something that has a value different from the asset that you're using. And so that's what we know of as DAI. DAI is supported right now inside Edge. So people for a year plus have been able to hold DAI inside of Edge and trade it for other assets, including Bitcoin, Ether.
So if I go into my wallet, if I have Tether, the one we've just been talking about, I can theoretically swap it into DAI.
Yep, exactly. So they're both ERC20 tokens. There is a version of Tether that's held on the Bitcoin blockchain. We don't support that on Edge, but DAI and Tether as Ethereum tokens is supported in Edge, and they're both roughly 1-to-1 with the dollar, but they may have different currency pairs that you could exchange them with. So like I'd mentioned, Tether having a lot of liquidity allows you to trade it with many different currency pairs at a smaller slip than USDC and or DAI, right?
But I would expect DAI is probably really good for ERC20 tokens because you have all those decentralized exchanges through Total.
You do, actually, but Total actually even supports anything that's in ERC20 can actually go through decentralized exchange, even if the asset itself is centralized.
That's
or
true.
Backed by a centralized institution. So Total supports DAI as well as some of the other stable coins. I believe Tether as well, actually. Tether and USDC. And probably a few others are supported inside of Total. So if you haven't heard of Total, TOTLE, it's one of our exchange partners integrated in Edge, which lets you convert Ether and ERC20 tokens back and forth between each other, and do it in a trustless way because it's using a smart contract to do the exchange.
The thing I really like about it is with normal swap providers in our wallet, you do the swap and a few minutes later after a confirmation, you see the funds show up. Total, it's one.
It's really quick. It's one
instant,
confirmation.
yeah.
Yep. The same transaction that you are sending out your funds, say you're sending out DAI and you want to receive rep tokens, that same transaction is the one that returns the money back to you. So once that transaction confirms, you actually have the money. So in Ether, that's on average 15 seconds. With a lot of the instant exchanges, which they're not custodial per se, but they're money still flowing through them. You have a small window of trust. With them, you're sending money. They're waiting for a confirmation, sometimes waiting for several confirmations. And then at that point, they're also processing the transaction, probably buying some currency from an exchange to hedge the risk before they're actually sending money back to you. So there's definitely a bit of a longer wait period, unlike using a decentralized exchange through Total.
So I understand that DAI is going through some kind of a transition thing right now.
Exactly. That's the main question that we have been getting because it is relevant to our user base today. And I want to give you an idea of how this affects users in Edge, both for the current version of the app as well as soon to come updated version of the app. So DAI is currently collateralized only with Ether.
Okay.
Right. So obviously Ether has its own level of volatility, and the ability for DAI to be stable is dependent on Ether being stable. So it can only handle so much volatility, especially on the downward trend. And so what the team at MakerDAO has been working on has been the ability to collateralize DAI with more than just one asset, more than just Ether. And so they've released a new version of DAI that now collateralizes the token with either Ether or BAT tokens, basic attention tokens. All right, so you now have the ability to stay stable if one of them, shows high levels of volatility. If hopefully the other one doesn't.
So if you have enough stability on one
exactly, and I think this was a major change to the protocol to just have multi-asset collateral. Right now it's just two, so it doesn't feel like a big change. But if any of you are in development work and software engineering, you realize supporting two is the big challenge. Once you do that, being able to support 3, 4, 5, 6, and 7. Usually everyone's hard coded to do one thing. Once you go, we want to be able to do two, that's the hard part. And after that, it becomes easy. Kind of like Airbits to Edge. Like, so Airbits, we only supported Bitcoin, and everything was very hard coded to Bitcoin. To support a second asset was most of the work for us to be able to support many different.
Right.
So same thing for DAI. So DAI now still exists as a single collateral asset, but it's been renamed. And when I say renamed, the protocol, like the Ethereum blockchain,
the smart contract is the same smart contract.
It's the same smart contract, and smart contracts don't know anything about the 3-digit currency code or 5-digit currency code. They don't know anything about that. That's really up to wallets and exchanges, payment processors, to call like Bitcoin BTC or to call DAI, DAI.
I remember when Bitcoin Cash came out, there was all this confusion. Is it BCH or
BCC?
Yeah, there's all kinds of different ticker symbols.
Because that's not in the protocol.
Yeah.
The protocol knows nothing about a currency code. So technically speaking, many wallets and exchanges are converting to calling DAI now SAI, which is SAI, to stand for single collateral DAI. Currently, the latest version of Edge doesn't call DAI SAI yet. It's the same smart contract. It's still called DAI. And what the team at Maker is promoting is that the new multi-collateral version of DAI is now what is going to retain the ticker symbol. It's almost like a hard fork, but we want to keep the ticker symbol. Like DAI hard fork, there's the old coins and then there's the new coins. Well, the new coins are the ones keeping the ticker symbol DAI, and the old coins are keeping the ticker symbol SAI. So realize that in Edge, even though your coins might still say DAI, that actually is SAI. We're going to update the app to add support for a SAI token, which is the SAI, and that will use the old smart contract. It'll show your old balance of DAI, and then the new DAI will be called just simply DAI. That'll use the new smart contract. And so effectively that'll show no balance unless you've converted your funds from SAI to DAI.
So if I have a wallet today that has DAI in it, the next version of the app comes out, the name of the thing has changed, so I'm going to see DAI 0. It's not like my money's gone. It's just I need to enable SAI. I need to go into the 3 dots menu, manage tokens, find SAI, hit the check mark to enable it, and then my funds will show up as SAI.
That's exactly it. So the way Edge enables tokens is by a currency code. Right, so the currency code by the ticker symbol, and the ticker symbol DAI, if you have enabled it in the past, and that's one of the default currencies in Edge, if you've enabled it in the past, it'll continue to be enabled, but DAI will then become the new currency.
Which you won't have any.
And you will shows as not having any balance. However, you just simply go into the managed tokens and enable SAI, and that's gonna slurp up your balance, and you'll see your old DAI balance in SAI. And at that point, you can actually go and convert it.
Using
the
total
new DAI,
or
using
whatever.
total. You just simply go to the exchange screen and say, pick SAI as your source wallet, pick DAI as your destination wallet, and send however much you would like, and it will convert that over. Right?
Nice.
Fairly seamlessly inside of the application. And you can do this as well if you happen to have the tokens on any other application. You can send them into Edge, and they'll show up in the SAI wallet, and you can convert them over into DAI. So it is a bit confusing. We had to look at this for some time, and admittedly, we started asking ourselves, "Gosh, why didn't they just call the new DAI something else like MAI, multi-collateral DAI, MAI?" But I see where the ticker symbol DAI has it has some marketing, has some brand recognition. At least within the cryptocurrency world. Obviously, outside they're like, "How is this $1? Why do they call it DAI? It doesn't make any sense." So they want to keep that ticker symbol for the new multi-collateral version of it. So hence this confusion in the meantime. Hopefully after a couple of months, this will all subside. Most people will have transitioned their funds over to the new DAI, and whatever's left in SAI, you can effectively just sweep out and then close or deactivate that wallet. One thing to note though is any smart contracts that use DAI inherently are also affected by this. So classic example of this is Compound.
Oh, CDAI.
CDAI, exactly.
Okay,
so let's cover that. This is an important, very, very important thing. So CDAI is compound DAI. And if you remember a few podcasts ago, or also a blog that a content creator, Brett Musser, put out that described Compound and what it is, it's a way to receive a token that represents an underlying asset but gains interest. So CDAI is compound DAI, meaning it's a version of DAI that effectively gains interest. You can convert, say, $500 of DAI into CDAI, and that gains interest at, I've seen anywhere from 4 to 7% interest annually.
Wow, that's pretty high.
It's pretty good. A whole lot better than negative interest rates, better than keeping your money in a bank. And so anyone that is currently holding CDAI is holding the old DAI, which is the single collateral version, and is effectively now holding SAI. It sounds so weird. I feel like we're yelling kitty words here. CSI, blah, 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 blah. Right. So you effectively are holding CSI, and that is actually also going to be renamed. Right. It's going to be the CDAI being renamed to CSI. They don't yet have any intent, or they intend to, but they don't have anything definitive as far as timing on launching a multi-collateral decentralized compound DAI. So that's not yet announced as far as when that will be launched, but we expect it'll happen because many people will come off the old Psi, and Compound would want to support the newer one. But just realize that if you had a DAI and you turned it into CDAI, you now really have Psi and you've converted it to C-Psi. God, this sounds terrible. This sounds, super sorry everyone for the confusion and the naming and whatnot.
It's not our fault.
It's not our fault, not in our control. At the same time, I respect the projects. I see what they're trying to do, and it's a hard problem. So we'll try to support them as best we can. And so you should see an update to Edge in the next week, which will create this naming change, and you'll want to activate the old versions of the tokens, the C-Psi and the C-DAI. I'm sorry, C-Psi and Psi, to see your old balances, and then convert them into DAI if you'd like.
Yeah.
Cool. Whew. Hopefully that answers some of the questions. If you do have any other concerns, feel free to give our support team a buzz, ping us on Twitter, and we'll be happy to walk you through that whole process. But expect an update in the next week or so regarding this multi-collateral asset DAI and Compound. Cool?
Yeah.
All right. So just about out of time. Usually like to end with just our update on events and where you can catch the team. Obviously, we're our home base here in San Diego. We've got meetups that are going on, every month. I just came from one yesterday with a team over at Casper Labs, CEO of Casper Labs, who's actually based here in San Diego. Gave a great talk, help understand what's going on. We'll have some events as well in December. Keep your eye out. Meetups, Bitcoin San Diego meetup group as well. I'll be headed over to Blockland Cleveland. It's their second event in 2 years. Conference talking about cryptocurrency, blockchain. It's on the 9th and 10th over in Cleveland, Ohio. And then right from there, I'm going straight over to LaBitConf. I'll be speaking there in Montevideo, Uruguay. Event's a couple days. It's one of the best events in the world, longest running to cover Bitcoin. I think Andreas has attended almost every year. Andreas Antonopoulos, great supporter of that group. And it's a nonprofit. So it's not a for-profit event. They do it for the community. Very inexpensive tickets to get over there. And then I'll be hopping around from there to a meetup in Porto Alegre, Brazil, just a few hours away from Montevideo. And we're doing a meetup there. I'll be speaking along with a few other projects, presenting at that meetup before heading back for the holidays. So
Sounds
come
like
check
quite
us
the
out.
travel schedule.
A little bit, not too bad. Cleveland's not too far. It's still here, domestic, and then really these two cities are super close to each other, Montevideo and Porto Alegre over in Brazil, and then back for the holidays, and hopefully another live Q&A after I get back. Thanks everyone for tuning in, and remember,
Not your keys, not your coins.
exactly. Cool. Check you guys out next week. Have a great Thanksgiving.